Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, December 21st, and this is the weekly market update. First of all, before I get started, I won't be talking to you folks again until next Saturday. So in the interim, obviously, we will have Christmas. I want to wish everyone, all the people that come here and listen, all the supporters, all the subscribers, anybody that I have, that's out there, a Merry Christmas. And I want to encourage you to, look at the true meaning of Christmas, and not just fall into the consumerism and the happy holidays. Uh, that's kind of my message. But I wish everyone a happy Christmas and for you and your families. Now, getting into this, let me go over the disclaimer. Anything that you hear or see on this podcast or video is not to be taken as investment advice. I'm not a registered financial advisor. I cannot give you individual investment advice. What I discuss on here is for informational purposes only. Please do your own due diligence. It's your money. It's your responsibility. Okay, so I'm going to call this episode Buy on the Election, Sell on the Inauguration. Why am I saying that? I think a large part of the rally that we've had, we have a lot of built-in expectations into the new administration coming in. There's been a lot of talk, a lot of it sounds good, but you have to understand something. In politics, a lot of things are rhetoric. And as I've mentioned before, and I've already been accused of being blackpilling, I was around when we had the new morning in America when Reagan got elected in 1980. It was kind of a similar situation in some respects, but different also. And it was similar in the fact that the country was in a malaise because of the Carter administration and the previous poor policies of a couple of administrations before that. You had come out of the Vietnam War. We had had an inflation. Economy was not doing well. And Carter was a disaster. He's the guy that put the solar panels on the White House. And when energy prices were high, he's the guy that was had the fireside chat with the sweater on, telling people to turn their thermostat down. And he was, I think he was a nice person, but he didn't know what was going on. And so people had had enough. And so we had this wave election, if you will, where Ronald Reagan was elected. And that's what he called it, Morning in America. We're going to deregulate, we're going to cut taxes. Same, a lot of the same rhetoric you're hearing from Mr. Trump, which is all fine. These are all things that I'm for. But will the rhetoric match action? And I will tell you already, if you listen to Mr. Trump and some of the folks that he's talking, or some of his, I don't want to use the word cronies, what do you call it, underlings, different people that are in the administration, let's put it that way. They're already backing away from things. For example, this whole thing about raising oil production by 3 million barrels a day. Actually, we're going to raise energy production by 3 million barrels of oil equivalent a day. When we talk about deportations, okay, well, he's already come out and said DACA is safe. They're not going anywhere. And so this is not something that's particular to Mr. Trump. All politicians say stuff on when they're trying to get elected, obviously, and then the reality is a lot different. And that's just a facet of our system where the guy's not a dictator. No president's typically a dictator and can come in and just do whatever he wants. Um, for example, you've already seen the rhetoric being ramped up by the Democrats against, Elon Musk, and he's unelected. Who elected this guy? Blah blah blah. Saw in the recent uh, continuing resolution bill where the thing because Musk got on Twitter and basically riled everybody up, which is good. And they basically ran it's interesting. They ran the budget, the continuing resolution was like 1,500 pages through an AI like Rock or something, and it showed all of the ridiculous spending. And once that got publicized, then all of these politicians had to walk it back. And of course, they were, these politicians are so disingenuous on both sides. They were saying stuff like, well, the Republicans just want to, they're going to stop, uh, they don't pass this continuing resolution, which had like a 40% pay increase for the Congress, by the way, all this other nonsense that's typically in their pork. It also had in there aid for the people in like the Carolinas, North Carolina that suffered from the hurricane. And so that was the tearjerker. That's what always happens. But this doesn't really work anymore. When you controlled like the media, um, you could get away with it. But now that, Twitter and all these other things, or X, has been kind of allowed to flourish, you just can't get away with it. And so they were forced to back it down. I think it went from 1,500 pages to 150 or 180, something like that. So, you know, I guess you can remain cautiously optimistic. You know, Obviously the election of Trump is better than, you know, the election of Kamala Harris. My main issues are number one, immigration, and I want these wars stopped. So if we do something on those fronts, I'm happy. But I don't think it's going to be morning in America because of all of things are different now than they were in the 1980 when Reagan was elected. I don't think that, there's a possibility, for example, on the energy front, that if the Permian Basin is plateauing and it's not growing anymore, then this is a problem, right, for world oil prices, because that Permian Basin, the other two shale basins, the Eagle Ford and the Bakken, have already plateaued. I mean, Harold Hamm gave a speech recently. He said the exact same thing. So there's a lot of analysts now that not a lot, there's a few analysts that are coming out and saying, hey, it looks like we might have plateaued. Okay, they're not saying outright decline, but you see, you know, uh, multiple operators in that basin saying they don't intend to raise production. Okay, um, so that's one of your arrows gone. Now you have the other situation where you have a this deficit spending that has to be dealt with. So, GDP is a component of government spending is a component of GDP. So if you come in and try to do a, Malay uh, cut everything in the budget, you're going to have down GDP. And so the people are going to fight tooth and nail on this. The bureaucracy is going to fight, all these mandarins in the bureaucracy, all of these entrenched interests in corporate America. A lot of people are feeding at this trough, and they don't really care about the good of the country. And so, can you do something in a 4-year election cycle when you're swimming upstream against all this? Well, we'll see. You know, as I'm going to get into later in here into the presentation, there's a lot of challenges coming at this administration that aren't being discussed right now that are going to make center stage rather quickly. And you can bet your bottom dollar that every misstep, everything that happens, um, it's going to be amplified by the mainstream media, the propaganda organs of the deep state and the globalists. Now, this is a continuing wrestling match that continues to go on. I'm not going to get into that now, but um, it's not going to be smooth sailing. It's not going to be, cutting regulation. We'll see. How much regulation can they cut? How many people can they cut? What kind of unique ways are they going to come up with doing this? How is that going to affect the budget? Because the budget's out of control. It has to be dealt with. Interest rates are moving higher. The bond vigilantes are, finally waking up and making their appearance as we see interest rates climbing. Where I think we're at 4.59% on the 10-year. What if we go to 5 or 5.25 on the 10-year? What does that do to the housing market? You already have mortgages at 7%. The housing market is, this is a major engine of the government, of the economy. And so President Trump made a lot of promises about getting prices down and inflation. But if you look at Trueflation website, inflation's on the upswing again. So what is the plan? What are you going to do? You actually probably need a very severe recession to really kind of break the inflation back. And I don't think that's something that people voted for. And so, you have some space to blame things on the Biden administration. That's why you have to move very quickly. I expect you'll see them move quickly, but there's going to be a lot of volatility and a lot of turmoil I think, in the 2025. That's my kind of my prediction. I'll get more into that in my January issue of the Actionable Intelligence Alert newsletter. I'll be discussing more in depth my views on things for where I think things are going to be for 2025. But there's a lot of it's hard to handicap this. And so I think that, again, that's the title of this week's video. By the election, there's a lot of euphoria, a lot of sign of relief that we didn't end up with this, you know, another 4 years the country couldn't take of this democratic progressive wing of the government. But, I think it's kind of the same thing like in earnings, right? You buy you sell on earnings calls, right? You buy before the earnings, sell afterwards, after the stock moves. And so maybe we're at the same kind of situation where, um, you know, there's just so much positive sentiment out there. And I think a lot of it is based on a lot of people placing what they want to happen or what they hope happens instead of, you know, into the market. And if it doesn't, if the reality doesn't match the expectations or the aspirations or the hopes of investors, um, then we could see we have a tremendously overvalued market that really needs perfection to stay at these levels and forget about moving higher. So I just want to see that preamble. We'll get into the charts now for this week. So first of all, I talked about this author at the FT. He wrote the article. I talked about it a few weeks ago about the U.S. being overvalued, overhyped. And this is the part due of all bubbles, mother of all bubbles, part due. I'll put a link to it in the show notes. I think it's a tremendous article. The first article was tremendous. So it kind of really lays out the idea. I forget the guy's author's name, but evidently he's pretty famous. But I think that, here's a few snippets from this article that follows up on his first article of several weeks ago. It says here, almost no one foresees an imminent pop. They're talking about this bubble that we're in. He's talking about this bubble. Virtually every Wall Street analyst predicts U.S. stocks will continue outperforming the rest of the world in 2025. But all this enthusiasm only tends to confirm that the bubble is at a very advanced stage. If the consensus on, quote, American exceptionalism is so overwhelming, who is left to hop on the bandwagon and inflate it further? This is exactly my point. If everybody's in, who's left to buy? Sentiment is so bullish right now. Who hasn't bought? Okay. And as I'm going to get into later, people have sold off other things that, you know, my portfolio is suffering and shorting it as a funding mechanism to buy even more American exceptionalism, which basically, in my mind, is the Mag 7. Article goes on. The bulls say America can remain dominant owing to impressive earnings of the country's corporations, but U.S. earnings growth would not look so exceptional if not for the supernormal profits of its big tech firms and massive government spending. Remember, government spending is at, 6 to 7% of GDP. It's at wartime levels in a good economy. I've been harping on this for a year. Going back to the article, over time, supernormal profits get competed away. That's correct. Growth and profits are also getting an artificial lift from the heaviest deficit spending ever recorded at this stage of an economic cycle by far. Then he goes on. By some point next year, investors will balk and demand higher interest rates or a demonstration of fiscal discipline, triggered perhaps by an even larger deficit or ever bigger auctions of treasuries. Those demands will wean the U.S. off its dependence on government spending, at least temporarily, and in turn undermine economic growth and corporate profits. And I'm going to talk about that in another slide where I talk about the fact that the U.S. government has to roll 31% of its debt. They have to roll like $8 trillion this year, plus about $830 billion of new debt. So this is why I think interest rates are going up. I've said this before. People are like, I don't understand why Jerome Powell is cutting rates with, all these speculative bubbles in the Nasdaq and all these tech firms and fart coin, and now you have unicorn fart coin and all this stuff. He's cutting rates because they need to finance a lot of debt, and they don't think that the bond market, you're certainly not going to be roll. I don't think you're going to be able to roll 7, $8 trillion, close, $7 to $8 trillion in debt and do it with long-term bonds. Luke Gromen has talked about this, how the U.S. has been utilizing short-term treasuries to refinance because if they try to dump all this on the long-term market, rates are going to soar. The market can't absorb, and that's why I think the bond vigilantes are going to come, into play. Again, it's coming. So, what's the plan? Is Doge going to cut $1 trillion or $2 trillion? I doubt it. Maybe 200 billion, something like that, and they'll call it good. So politics is about what is possible, not what you want to happen or rhetoric on a campaign trail. And so what is actually possible? And you don't have 4 years to do anything. You have about a year and a half because then you have the midterms. So we'll see. We're going to know fairly quickly, I think, by next summer where we're at. With a lot of things getting ready to happen, I think, in my mind, that no one is considering or just flat out ignoring if they do realize it. So we go here. This is from the Bank of America survey that comes out, Global Fund Manager Survey. So Fund Manager Survey, cash allocation fell to lowest on record. So your fund managers all are all in. They're all in. As a matter of fact, this is net percent of fund managers uh, of their cash. They're all in. And so again, who's left to buy? That means you're all in. If you have a 401k, if you're in an index fund, you're all in. I get a publication that goes over all the hedge fund holdings. It does it quarterly. And it's funny, all the hedge funds are in the same stuff. They're all in the same top 20 stocks. Mag 7, that's it. Everybody's in. And so expectations are very high. Um, will the performance of these companies match the expectations? That's the question. I hope so. And it's not just U.S. investors caught up in the FOMO. This is the foreign holdings of U.S. financial assets going back to like 1953. It's at an all-time high. So even foreigners are in this. So that's the thesis, right? The U.S. is so dominant. It's such a big exceptionalism. It's so far above everyone else in the world that uh, it warrants this premium. That's one argument. That's the argument that everybody, all the FOMO, all of the everybody that's in, that's their argument. These things don't matter. Valuations don't matter. History doesn't matter um, because the U.S. is uber alles above everyone else, and the gap is so large, and that is why all the capital is flowing into the U.S. No, it's because you're in a bubble, and bubbles beget more bubbles, and headlines, new highs, more money comes in, and then it goes like this until it doesn't go anymore, and then it reverses. And that's what I'm suggesting. Do I think that it can go get even stupider? Yes, it can go even higher and get even more stupid. But eventually this thing's going to pop. And I think we'll have to talk about that at a later time, but I think, Trump's going to end up wearing all this, and so are the Republicans. It probably would have been better if the Democrats would have won, and this thing would have came apart on their watch, and then they would have been out of power for the next 50 years. But uh, there's a good possibility when this thing blows up. I mean, it's going to be like 2008 or 2000. I'm not predicting that, but everybody is in, even foreigners. Every time I bring up a chart, it's always a record amount of fund manager cash in the market, or cash balances. They're negative right now. Record amount of foreign holdings of U.S. assets. Record, record, record. So if your argument is, I know people are making the argument, most people, financial media, people on CNBC, yep, America's so wonderful, so great. Our tech sector is way above everybody else, blah, 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 blah. Then that's your argument. But I believe that valuations matter. And I believe that you get what you pay for, you know? And so this is out of control. So it won't take much to get a change in sentiment. And it may have already happened with the last uh, Fed meeting last week where Jerome Powell was talking about, not cutting as much. And even while they're cutting, rates are going up on the long end. So this isn't working like it's supposed to. So you have to ask the question, why is that? So this was a good thread on X. I just put the first tweet, if you will. I just put here as a top at the slide title. We are near the end. This Jason Goatford. He says something odd is brewing. In nearly 100 years of history, this has never happened before. The S&P 500 is within spitting distance of a high, yet fewer than 39% of its stocks are even above their 50-day moving average. So what am I talking about here? We're talking about stock market breadth. In a healthy market that's advancing, most stocks are in uptrends. They're at least trading above their 50-day moving averages. So what we're saying here is that in 100 years of stock market history, even though we're having these new highs every other day, the amount of stocks that are participating and forcing this up is getting smaller and smaller. Again, it's right what we've talked about before. It's all going concentrated in those 20 to 30 tech stocks that everybody and his brother is buying. I mean, that's interesting because I've looked at some people have pointed out they'll have some fund. I think it was even an energy fund that somebody was pointing out, and they had even snuck some of these tech stocks into the fund. And so basically, if you're a fund manager, what is this all about? This is about having as much assets under management in your fund as possible, so you can charge fees on those assets under management. And so if you're underperforming the market, I hate to say it, most people are not Buffett and Munger and, they're not, they don't have patience. And so they chase performance. They chase the shiny object. And so it's the same thing in fund management. If you're not performing and beating your benchmark, you are gone. They will get somebody else. And so you're forced into buying these things, whether you want to or not. Just hold on to your job. You can't say, well, you can't make the arguments that I'm making on this. Uh, you might believe those in your mind. You might be sympathetic to them and say, yes, I agree. This is all overvalued, but I'm trying to keep my job here. And so I have to own these these stocks at these crazy valuations or they'll fire me. It's that simple. So there you are. So it's more and more evidence is circumstantially pointing to we're closer to the end than the beginning. Again, that doesn't mean it can't get crazier. I don't want to be I don't want to be anywhere near this. This is just not my style. And a lot of people, this is their style. But I know from my investing career that spans decades now that it doesn't work long term. You can catch a wave, but are you nimble enough to get off at the right point? Everybody thinks they're that smart, but in reality, they're not. Because if you're involved in a FOMO situation, I mean, even Druckenmiller talks about this. He talked about, I think it was in the 2000 tech bubble. He got out, he made a ton of money, and then the market kept going up, and he couldn't help himself. Even probably the guy who's the GOAT, who may be one of the greatest investors of all time, if not the greatest investor of all time, he got out when it was overvalued. He took his chips down. He had a big profit, but then the market kept going up. He tells this story. He said it was the worst mistake of his investing career. And then what did he do? He got back in because the FOMO even got to him. Okay. And so he bought back in. I think he ended up right before the tech bubble rolled over in 99, 2000. And I think he ended up losing about $4 billion. And so uh, if you say, well, I'm going to be able to get off at the top because I'm so nimble and I know what I'm doing, well, Allah be with you. You're going to destroy everybody. And I wish you well. But how many people can actually do that? If Druckenmiller couldn't even do it, how are you going to do it? And so just be aware that this is out there. And you can say, well, you're just a broken record, John. You've been saying this for like over a year. Yeah, John Hussman's been saying it longer than that, and you can say, well, these things matter, but we have to make money. And so that's an argument. But I have found that in the end, if you look at a long investing career where you're trying to compound capital and protect capital, getting involved in bubbles is not a good idea. That's just my point. So if that doesn't appeal to you, if you're looking for the shiny object, then this really isn't the place for you. Okay? I'm a contrarian. I've seen this before several times now. I've read about these things. I participate in these things. I've had a long investing career, and I will tell you that, uh, you know, kind of like Chuck Prince, right at Citigroup, you know, we know it's a bubble back, when before he blew up the bank, but when the music, you just got to get closer to the door and dance while the music's playing. Well, that didn't work out well for him. So this is part of the problem here. So you have the US dollar now has, broken out from a recent consolidation. I don't want to get too much into technical analysis, but it's moving higher. Remember, the euro is this is the dollar index. So the euro is one of the main components there. So uh, if the euro is going down and crashing, which it is, or like the Canadian currency, these other currencies are not doing well versus the dollar. Why? Interest rate differentials. All these places are cutting their rates or expected to cut their rates and expected to cut them more than the US. And so you have dollar plus all of the FOMO that's going on. All this foreign money is pouring into the US. Okay. And so this isn't really good for hard assets, obviously. This isn't really good for various emerging markets that have dollar-based debt, obviously, their ability to service their debt. So this can get really bad. And so the one thing I will say is that the Trump administration has been very, very clear that it wants a weaker dollar. Why does it want a weaker dollar? It wants to stimulate manufacturing and exports from the US. How are they going to get a weaker dollar? I'm not sure. But I do think at some point later this year, early 2020, as we have to roll this 31% of the total debt of $8 trillion this year, there's a good possibility we're going to end up back in QE because I don't know who's going to buy all this debt unless they're going to finance it all on, 1 year treasury bills. And how people are starting to wake up to this. So, the dollar is up as a result of, this is a 10-year treasury. It's moving higher. So, the relationship is broken. Typically, in previous cycles, the Fed would cut rates and you would see rates decline across the curve. And that would do what? That would allow people to refinance, lower their debt servicing ability. It would stimulate housing, stimulate automobiles because loans would be cheaper. But that's not happening now because you have the long bond now. They're cutting rates. They've cut rates, I think, 3 times this year. And we have the long bond going up. Rates are going up. So what is this telling you? Okay. The bond vigilantes are waking up. They're saying, hey, you can't spend 6 to 7% of GDP going forward forever. And so these things are not going to go straight up and straight down. They're going to trade. So these are important things to watch, right? What we saw back here in the spring when rates got to like 4.7%, we're at 4.59. We have the dollar. It was the same thing. You saw the dollar moving higher then also, right? And so, well, that was back in July of 23, but um, these are all intermarket relationships that you need to be aware of. So people are like, well, why is gold going down? Blah, blah, blah. Well, I mean, when the dollar's going up, oil, gold, hard assets, they tend to go down versus the dollar. So you have to be aware of all these relationships. What's forcing the dollar higher? Rate differentials, okay, is one, plus all the money flowing into FOMO into the Mag 7. I just pointed out the charts earlier. And so you have to watch these intermarket relationships and understand them, and most people don't. Now, longer term, all roads lead to money printing. I mean, they're not going to get out of this. Okay, so it's just going to matter how it blows up, what the catalysts are. I can't predict that. I don't have any idea. Maybe they somehow patchwork this together and get through it. I don't know this time, but this isn't really working like it's supposed to, or it has in the past, where you cut rates and rates come down across the curve, stimulates housing, stimulates automobile manufacturing, other facets of the economy. The economy grows, it overheats, then they have to raise rates. You know, the typical economic cycle. It's not working. And again, I don't hear anybody really giving a great answer of why is the Fed cutting rates? If unemployment is so good, remember another thing. Um, what's going to happen to wage costs? What's going to happen to prices if you start deporting all this basically illegal labor? Bringing all these illegals in really did tamp down inflation because they took a lot of jobs and will work for less wages. Somebody's going to have to work. If you're running a lawn care business and they come around all your guys up, are you just going to pack it in? Or are you just going to try to cut the lawn with you and your son? Or are you going to have to go out and hire some Americans or some legalized people and pay them instead of paying, you know, $8 an hour under the table to an illegal, you're going to have to pay $15 an hour. And what does that do to your business? Does that mean you have to raise prices? Yes, you do. So a lot of things happening. We're not in mourning in America. We're at the culmination point, as I've said before, of a debt cycle that has been decades in the making and is now poised to blow up in everybody's face. But again, we'll have to wait and see. That's what I'm saying. I've said this for the last couple of years. You're going to have so much volatility, it's really going to be hard to for most people to make money. There's going to be such swings back and forth, and we've seen that, right? This is why I stick to the mantra of just buying things as cheap as I can, and that gives me downside protection or more downside protection. I cannot, I just am not of the mentality I'm going to buy these things that are historically overvalued. I'm not going to do it. So here we get to the U.S. debt that needs to be rolled this year. I've been talking about this off and on for a year too. This is a big year. This is if you look at the if you look at a chart and the for the debt rolling, next year's a big 2025 is the year. So what do we have here? So it says, as of December 2024, the U.S. Treasury is preparing to refinance a substantial portion of its debt maturing in 2025. Approximately 31% of all outstanding U.S. government debt, equating to about $7.6 trillion dollars, is set to mature within the next 12 months. In addition to rolling over maturing debt, the Treasury plans to issue new debt to cover projected budget deficits. For the first quarter of 2025, the Treasury estimates borrowing 823 billion in privately held net marketable debt, aiming for an end of March cash balance of 850 billion. The Treasury strategy includes a significant reliance on short-term Treasury bills, which now constitute about 22% of the total debt, up from 10 to 15% in the years before the pandemic. So you see what they've done here? This is your answer right here. This is why they're cutting the Fed funds rate because they're relying on it, as Luke Gromen said, like a payday loan service. Okay. They're just rolling the debt and trying to push that rates down in the short term because there's no way you're going to go into this market. There's no way you're going to go into the market and try to term out your debt with rates rising at 4.5, 5. I mean, rates will go through the roof on the 10-year bond if you try to dump $8 trillion of debt on the market. There's not enough saving. People won't buy it. They can see what's happening. That's the bond vigilantes. And so that's why they've been cutting rates, in my opinion. And so, you're going to get a new Treasury secretary in there, a new administration. They have to deal with this because this is what Yellen and the rest of the funky bunch has been doing, running a payday loan deal. This is a big deal. This is the thing that I think could blow up in everybody's face next year. Maybe they can pull it off. I don't know. I hope so. I really do. But I think there's a good chance with this kind of amount of debt that needs to be rolled, you're going to dump it all in the treasury bills while you're cutting rates. Who's going to buy the? I'm not. I won't. Who's going to buy these treasury bills? And then you have to roll them again. I mean, remember, bills only go 3, 6, and 3 months, 6 months, and a year. Then you start getting into 2-year notes, 5-year notes, and then bonds, 10 and 30-year bonds, right? So we'll see. But this administration is going to have the next incoming administration is going to have a. This is why I wouldn't have wanted to been president, just because of this. This has the ability to blow the whole thing up. So this is Amy Nixon. This is somebody that I follow that is big on real estate. She's on Adam Taggart's show occasionally. She's up in DFW. She had a thing that says here, let me make this clear since people still don't seem to understand. There will be no soft landing for real estate. The Fed has cut 3 times since September 2024. The 30-year mortgage rate was 6.08 the day of the first cut. Today is back over 7%. So it's harder and harder to buy a house. This is another one of the promises, right? Trump was going to make things affordable again. He's going to get rates down. He's going to get gasoline prices down. How is he going to do it when you look at like the geology of the Permian? It's not that he doesn't want to do it or he doesn't desire to do it or we don't want it. The geology is going to prevent that from happening. It's not that we don't want to get rates down. We can't. We have to roll 30% of the federal debt and we're still accumulating more debt. Do you see the problems now? So if rates are going up, this is another thing that they're going to have be hard pressed to deal with. So this is another thing. Natural gas is slowly but surely seems to be rallying over the last, year or quarter. Same thing in Europe. If you look at the European prices, which I'll show in a minute, again, I go back to the writing that Adam Rosenzweig has done at Goring and Rosenzweig vis-a-vis the shale basins and talking about not only oil plateauing, but gas production plateauing. This is another thing I think people aren't looking at. That's another thing I need to do some more work on is, total gas production in the country. I don't remember what it is on top of my head now, 90 billion cubic feet a day or something like that. But you still have now, you're talking about Trump, he's going to allow more LNG export facilities to be built. I've been talking about the whole AI electricity thing. Inevitably, 10, 20 years down the road, that's going to be, you know, hopefully powered by nuclear. But in the short term, you're talking about gas turbines. Okay. You've already seen the order book starting to expand at GE for their heavy gas turbines and aeroderivatives, which are used to power these data centers. So what Musk did up in Memphis at his data center, he couldn't wait. So he just brought in some trailer mounted aeroderivatives, hooked it up and got it online, which is fine. But this is an increase in gas demand. Okay. Natural gas is going to be the bridge fuel for the AI stuff until they can get nuclear ramped up, which is going, like I said, going to be a decade minimum. And so if we're plateauing, gas production is plateauing along with oil production. I'm not saying it is, but we'll have to wait for the data. Again, you have to be of the persuasion and view that it's just a matter of price. If price goes high enough, uh, people will respond. Again, these are geological factors. One of the things I think Rosenzweig did a good job on was if you read the Q3 commentary, this is not the first time that the United States did a drill baby drill thing. After the oil embargo and after the issues with the Arabs in the early 70s, the conventional oil production was in decline in the United States. And so the Nixon administration uh, had a desire to raise oil production, obviously, to get the price down. And he talks about, things that they did to stimulate it and try to get production up of oil domestically. And it just didn't work because it wasn't because there wasn't enough money. It wasn't because there wasn't political will. It was a geological problem. Okay. Oil fields, oil basins, countries that produce oil go through a period, and he talks about this in the paper too, relying on the geologist King Hubert, who did this work for Shell in the 50s about depletion, and that once you produce a certain amount of a field, it goes into terminal decline. No matter how long you make the laterals, no matter how many drilling rigs you throw at it, it's just a geological certainty. And the question is, if we have reached that point, then you're building all these LNG facilities, you're building all of these things, export facilities, the desire to use the stranded gas in the Permian, things like that. But again, what does this really mean? Maybe I'm wrong and I just don't understand it. And if the price of gas goes to $8 or $10 an MMBTU, so many drilling rigs will come in and so many places that hadn't previously been drilled will be drilled and it won't be a problem. You'll have another crash in prices. Same thing with oil. But I don't see the people that are actually producing these things saying that. What they're saying is they're talking about plateaus. They're talking about shareholder returns. They're talking about not raising spending, okay, and just having growth for the sake of growth. Again, maybe that's just a factor of price. And if price goes up, I know a whole nother cornucopia of, you know, resource will open that I'm not aware of. I think that will be the case, but it'll be offshore, but that's another discussion. I think that's where you're going to see the growth, but that's down the line. So, is this is something to watch for 2025 too. That's kind of under the I need to do more work on this. Where are we really at with daily production, exports via LNG, what's current and what's proposed, and then the gas-fired electricity demand that's being anticipated to power all these AIs. Um, I thought somebody made an interesting comment the other day on a podcast I was listening to. I forget who it was, that you're actually going to see coal come back. And you won't have like Meta and Google and Microsoft building coal plants. No, no, no. They're not going to do that because that will soil their green credentials. But as demand for this gas-fired power comes in for this AI uh, growth, that's going to, coal is going to have to reemerge to supply the rest of the electricity demand for residential, industrial, and commercial, right? So uh, I wouldn't be sleeping on coal either. So there's a lot of dynamics at play here. Um, and hydrocarbons are to a certain extent fungible. You can burn more coal and build and have electricity, right? You can. So we'll have to see what happens. But I think that this is an area to watch. So here's European gas prices. This is in MMBTUs. They have the TTM price, but they have charts that track it in MMBTUs. So, you're at what, 340 here in the US in MMBTU, and you're at close to 14 bucks in Europe. So that's why people want to build all these LNG export facilities from the US so that they can buy gas cheap in the US and export it to places like Europe and capture this differential. This is economics 101, arbitrage, right? There's a gap here. There's an arbitrage potential. But what I'm saying is, are they going to overbuild the exports just at a point when gas production in the US may be plateauing, and you have a new source of demand, this AI explosion in AI power needs for these AI centers? So here was an interesting thing on X that goes back to what I was saying before about the Mag 7, basically the shiny new object. It says this is from Tracy Reinick. If you're a professional investor running a portfolio or managing money, can you own the energy stocks right now? No, you cannot. And then down here, she shows the year-to-date returns versus the Mag 7. And she says this, I have sold all the energy stocks in insider trader and value investor portfolios. And so you see the divergence. You see the Mag 7 here in purple going, at a 60%, 60-degree moonshot. Well, it's not quite a moonshot, but it's moonshotting. And then you have your XOM and XLE basically barely up for the year. And the Mag 7 is up 80%. And so another person made the argument that people not only are selling down energy, they're actually shorting energy against the Mag 7. This is getting very dangerous, and this is very contrarian for me. Okay, this is just ringing the contrarian bells in my head. Now, I've been wrong. We have underperformed in the Actionable Intelligence Alert newsletter this year. Everything that I'm in has not worked. I'll just be honest with you. It's not worked. And I appreciate the subscribers have stuck with me because these are we had a lot of turnover this year because again, it's mostly people that stick with me are people that get the long term, that get contrarian investing. Okay. Um, but again, the newsletter business is like the money management business. It's all based on performance. If you're not performing, then it's like, why am I paying you to show me stocks that aren't going up when I can just buy the S&P or I can just buy the Mag 7? The worst thing that can happen, I think it was JP Morgan said is, for a person is to see their neighbor get rich while they don't. And so again, I go back and use these little vignettes that I make up about, especially around the holiday season when you go to the family get-togethers and you have your moron cousin or ex-brother-in-law there with the pants from one suit and the jacket from another one, espousing down in the basement, finished basement bar pool room area about all the money he's made in Meta and all these other things and in Fartcoin. And isn't he so smart? And you're sitting over here owning Exxon and Occidental Petroleum, and aren't you the idiot? People don't like that, and so that's where the emotion comes in. And I understand that. This is explaining it to you right here. If you're a professional investor or newsletter writer running a portfolio or managing money or writing about stocks, can you own the energy stocks right now? No, this is contrarianism 101. Now it's time to buy. I mean, I even have the dividend portfolio where I have a lot of energy stocks in there. We have top-notch international oil companies that pay solid dividends that have a plan to return capital to shareholders, and some of them are down 25, 30%. And so what do? I take the dividends and reinvest them in those stocks because I know eventually this is going to reverse. In the meantime, I mean, if you have not bought Mag 7, do you really want to be buying it now? And so here we go. Here's an article. Here's a tweet from Zero Hedge. Exxon is the most oversold since the COVID crash when oil was negative. Let me say that again. Exxon, probably the biggest, best managed oil company in the world, bar none, par excellence, top notch. Okay, pick of the litter. Exxon is the most oversold since the COVID crash when oil was negative. All the momos are using energy as the funding leg to pile into Mag 7. I mean, there you go, folks. So that's a big theme in 2025. I think it's going to reverse, but it may not. We made a tremendous amount of money in the portfolio. It was the biggest year we ever had in the Actionable Intelligence Alert newsletter when oil went negative and we were buying energy stocks hand over fist. Is this exactly the same scenario? No, but when you look from an RSI, relative strength, Exxon is the most oversold since the COVID crash. I mean, if you want to be safe, just buy Exxon. But I think that or at least put energy on your radar and look for a trend change in the stock prices, like Paul Tudor Jones. Maybe you don't want to have the opportunity cost of sitting there waiting for something to turn. People don't like that. Me, I don't try to time the market. I find that I can't do that. I'm sure a lot of people say they can, but you know, I don't know. We don't see their records. So I try to look for, when they're ringing the bell, uh, at tops and bottoms is when I'm, most active. I would note that Warren Buffett was back in the market during the sell-off last week buying more Occidental Petroleum, if that means anything. Well, he's been selling Apple down, but you could say, well, he's in his 90s and he doesn't know what he's doing anymore. And so fossil fuels aren't going away either. This is the problem, right? Fossil fuels aren't going anywhere. The good thing I think about the recent election was, and it was happening before that, it was leading up to the election, and you're seeing it now even in Europe and other places, Canada, where all of these politicians, these globalist stooges and shills for the globalist agenda, who are serving the needs of their globalist master instead of the national interests that they have for the people that are in their countries. Everybody was on that ESG, uh, zero carbon 2050 goal. That's out the window. And so here we go. Here's a chart says no quick end for fossil fuels. Everyone claims a supposed green transition with zero fossil fuels by 2050. In reality, fossil fuels still provide 81% of global energy in 2022. Fossil fuels decline so slowly that zero will take 4 to 9 centuries. So it's not going anywhere, and it's been underinvested, and it's tremendously out of favor. I don't know. That's where I would be. Here's coal. Again, the IEA down here. I put up here, coal keeps the lights on. That's what you see on the billboards in West Virginia. Walker Cat, the equipment supplier. Says, as the IEA puts it, coal is often considered a fuel of the past, but global consumption of it has doubled in the past 3 decades. Worse, not only has surge usage grown a lot, particularly in China and India, but demand will keep rising for the foreseeable future. Interesting. You go back up here to the chart and you see the International Energy Agency has revised higher its historical coal demand data and its forecast from those published in earlier years. I have a better chart here. It shows a little bit. You could see 2020, 2021, 2022, 23, 24. Coal demand just keeps going up. This is why I like a company like Glencore. Uh, you know, it's interesting. As people were selling off their coal assets, Glencore was buying coal assets. I thought that was interesting. I like managements that can see that. They actually took it to a shareholder vote and said, "Hey, shareholders, do you want us to divest coal?" And the shareholders said, "Nope, we don't want you to divest coal." So copper and coal is Glencore, is what they're heading, what their main themes are. I think it's going to work out over the remainder of the decade. So I wanted to bring this up. Argentina, we've talked about it before. Last month, I wrote in the Actionable Intelligence Alert newsletter in the December issue about how I have been bullish on Latin America for a while and emerging markets in general. Obviously, with the FOMO in the US and the dollar moving higher, they haven't really moved higher, although Argentina has done very well. Its stock market, but it was so blown out that, uh, it was inevitable. But the headline this week was Argentina exits recession. When Milei got into office, I've talked about it before, how I didn't have the true faith and I sold before the election, but bought back in afterwards when it became apparent that he was actually going to be able to push through a lot of his reforms. Now the reforms are starting to take root and green shoots. And so what do we have here? It says in the article, Argentina has come out of a deep recession in a major victory for the country's unorthodox president, Javier Milei, who has spent the past year enacting sweeping and painful reforms in Latin America's third largest economy.
Gross domestic product grew 3.9% in the July to September quarter compared with the previous 3 months. Now, it was down year over year like zero point 0.7, but quarter to quarter, it's on the upswing. The agriculture and mining sectors drove the expansion, with consumer spending also growing strongly. But manufacturing and construction suffered sharp declines in output. Now, construction, basically, the government there, the federal government just stopped all construction projects when Milei came in. He stopped them all. So I suspect that this will catch up at some point. Um, One of the portfolio holdings I have is involved in construction in Argentina. It was profitable all through this recession, but its revenue is down like 30%. I think that will change. Um, I think there's still opportunity there. The place is really overbought. You know, the last blurb here, it says Argentina's flagship Merval stock index, which tracks around 2 dozen of the country's most valuable listed companies, closed more than 7% higher Monday. That's on this news. So far this year, the index is up 174% as investors have welcomed Malay's radical reforms. So, yeah, the market is up a lot. It's if you look at the relative strength indicators for a lot of the Argentinian stocks that trade on the NYSE, they're way overbought. So I wouldn't go rushing in there, but I would keep it on my radar because I think this is going to possibly go up a lot higher. These things are multi-year trends if he can get this to stick. Now, one of the criticisms, and I'm not smart enough to figure this out, but one of the things you have to be aware of is that as the economy's gotten better, the Argentinian peso has strengthened. As a matter of fact, I think that the official rate and the black market rate are within 10% or less of each other. And so as the peso has strengthened, it's made costs go up in Argentina. For example, I read an article this week where like a Big Mac costs like $7 in Buenos Aires, just to use the Big Mac index, if you will. And then you see little other vignettes about or news articles here, anecdotal things where people that live near the border of Chile or Brazil are going into those countries and able to buy things for 30% cheaper, groceries and things like that. So there is some discussion around dealing with this currency, what they're going to have to do. It's not full floating yet, but I think that with the budget in surplus, I think that people really are underestimating the effect that the ramping up of the Vaca Muerta oil and gas shale basin, which is basically exploding upwards. I believe that the chairman of YPF was in Europe this week discussing a long-term LNG export deal with Shell. So again, I've pointed out before that like when Margaret Thatcher came into office in the UK, it's just around the time when the UK North Sea was ramping up its oil and gas production. And obviously, the UK share, there's a UK portion of the North Sea, so that was ramping up. And so she got the benefit of that also. And I think Malay is going to get the benefit of this also. So, you know, we'll have to watch things and see what happens. It's overbought. But the thing I want to impress upon you in the theme of the article was the next person that's up for election in South America or Latin America is uh, Gabriel Boric, who is the that mid 30s, I think, president of Chile. And if you look at the current polls, I mean, his approval rating is not very good. He has a very high disapproval rating. And if you look at the polls, center right and right wing parties are leading the pack of constituents. Now that election is later on in 2025, but you need to understand something. As Druckenmiller says, it's are people going to start looking other places in South America, other countries when they say, well, if Argentina's turning around with these kind of policies, okay, wouldn't it benefit us to enact similar policies or politicians that are going to reform our economy? Boric was a young guy. He was a progressive, and they were trying to change the Constitution and all these things. And he's very unpopular. And so, if you go by what Druckenmiller says, that markets trade on what's not happening now, but what is going to happen in 12 to 18 months. it would behoove you to start looking at Chilean stocks. I mean, there's probably a half dozen or more Chilean stocks that trade on the NYSE. There's a couple banks I know that are they're paying double digit 11, 12% dividend yields. Might be something to look into. Something similar could happen with these stocks that happen in Argentina. Now, the situation in Chile is not as extreme as Argentina's was, but I think that there's a whole renaissance happening around the world where people have had enough of the status quo, progressive, globalist, post World War II neoliberal world order, and you're seeing it collapse everywhere. Trudeau's on his way out in Canada. Um, Schultz is on his way out. The government collapsed in Germany. He's on his way out. Now, I'm not saying, Starmer just got elected in the UK. He's already way in the negative on his popularity. Macron is hanging on by a thread. So, all of these globalist stooges, people have had enough of it. And so you're seeing this around the world, and they're trying to hold on to power. You see the shenanigans that Macron plays to try to stay in power, or the demonization of AfD in Germany. And then, like, they tried even when Elon Musk was talking about AfD's policies, which were probably no different than center Democrats 10 years ago in this country, as being like right wing. We can't use the term on YouTube, but 1930s Germany political party. I mean, these are all demonizations because these people are losing power. They are ineffective, ineffectual leaders who are not meeting the expectation and needs of their citizens. And finally, people have had enough. And so when you see examples like this in Argentina, people look to that and they say, wow, that could happen here. That's why, Trump got elected. People had enough of the nonsense. Now, I'm not saying that these politicians can fix anything. I don't think you can do the same kind of radical reforms Malay did in these other places just because of the fact that, again, politics is a game of what's possible, and the wheels had completely fallen off after 70 years of mismanagement in Argentina. So people were ready for that radical change. Nevertheless, uh, market reforms we have seen over and over again can lead to good economic outcomes. So something to consider. If you're interested, I talk about it more in the December issue of the paid issue of the Actionable Intelligence Alert newsletter. So here's Germany again. Again, Schultz is on his way out. The stoplight coalition is a total disaster. I've had a lot of people from Germany on both sides. I've had a lot of encouragement and praise for my criticisms, and it's not against the German people. It's against this I don't know, these global stooges that somehow get themselves in power that don't represent the people in the country, the interests of the people. They represent their own interests and the interests of some, like I said, the post-World War II globalist neoliberal world order. It's not a conspiracy. This is what it is. And so this is an example right here where you see orders minus inventory in Germany are now at COVID levels, pandemic levels, and continue to drop. There's no sense that, it's kind of like, I watch a lot of NTSB videos of airplane crashes, and you can hear the cockpit indicators. Like when somebody stalls an airplane and it's going down, you can hear gets to a certain altitude and uh, you start getting these voice indicators from the airplane, pull up, pull up. I don't see this thing's crashing. Okay. And this is, in my mind, all self-inflicted. This is nothing to do. Now, this is a competitive world. The Chinese are very competitive in auto manufacturing. Obviously, this is one of the stalwarts of German manufacturing prowess is automobiles, but it's been sabotaged by politics. And I would say 75% of the problems are political. They're not political choices that were made. They have nothing to do with, well, we're just getting killed by superior technology or superior manufacturing quality. We're getting killed because our politicians put us in a situation where we can't be competitive. Again, energy goes into everything. I've been saying that since I've been on the internet. for 5, 6, 7 years. If you have high energy costs, you're screwed. Your costs are too high. And then all the other stupid uh, decisions that have been made, have put you into this basically you've stalled the aircraft and you're in a dive and you may not be able to pull up. At some point, you run out of altitude to fix a problem on an airplane and it crashes. Something similar could be happening here. And I think that even if the CSU coalition gets in there, it would be better than what's in there now, but it's not what's required. You need radical surgery and chemotherapy. And I don't think the people in Germany are ready for that. People in a lot of Western Europe are not ready. And I'm just going to go ahead and talk about it. I don't know all of the facts, and some wag will be, then you shouldn't comment on it. They'll say that in the comments. But haven't we seen enough of these, let's say, immigrants from the Middle East that have been allowed to come to Western Europe? How many times are you going to let these people drive through crowds of people? You have to make a decision here, okay? And I've said it before, and this might get this video sanctioned. Islam is not compatible with Western values. Now you have a situation, and everybody in Europe and the United States and all of the West has their head in the sand up about this. How many times are you going to have people drive through a Christmas? Not only that, they had Islamists protesting the Christmas marts and things, okay? If you don't think that if they get in power, they're going to ban Christianity or put you in a subservient position, then you're a fool. And this is where it's heading, okay? This has to be dealt with. Now, I'm not going to get into what I would do, but you can look at what the Byzantine emperors how they used to deal with this. That kind of, if you want to look that up, that's kind of how I deal with it. How would I deal with this guy? Okay, I'll go ahead and say it. How would I deal with this guy? I'd give him a trial. If he's in fact convicted of driving through there and injuring and killing all these people, public crucifixion, deportation of all of these radical imams. You will not build any more mosques in these the same thing that happens in these countries. Well, that's too radical. You better get radical because they're coming and they ain't stopping. That's the history of Islam. Submission and expansion. Expansion and submission. If you don't think that Europe can't turn into Syria given enough time, then you're a fool. It won't happen in a year. It won't happen in 10 years. But as one of the imams that I watched, you can watch the sermons that are given in the mosques in the Middle East. They have a channel, it's called MERI, and you can listen to what they say. Okay? They don't even recommend any kind of violence. One imam said it perfectly. The wombs of our women will be the how we will take over Europe. They're just going to have more children. They say that when you have these little confrontations in the streets. We're having more children. You're not having any children. Eventually, we'll be in charge. That's it. So that was a little bit of but this is kind of indicative of what the real problem is. It's not just, well, we can just change from the stoplight coalition to CDU. This is a fundamental philosophical, ethical, moral, religious, all of these things come into it. And it's like, Western European man has just lost his mojo. I don't know why or how. The feminization of Western Europe and of the Western world, that's part of it. I don't want to get in too far to this because it's getting away from, but you know, men have to step up. Hard men, men of logic, men of discernment, men of action. That's it. Instead, you have a lesbian in AfD. Alice Weidel is the leader. I mean, is that going to change things? Where are the men? So here we have from Arnaud Bertrand. He sums this up in a tweet. Look at what's happening to Germany's economy. Looking at what's happening to Germany's economy really makes you feel like you're taking crazy pills. So here we have Europe's largest economy facing irreversible decline, according to Bloomberg. And everyone openly acknowledges the main cause, the loss of cheap Russian energy, making German manufacturing collapse and leaving all households poor. Yet political correctness means no one discusses the painfully obvious solution, restoring the flow of cheap Russian energy. I don't know. That's what I've been saying also. Goes on. It's like watching someone die of dehydration while experts hold conferences discussing long-term fluid management strategies and write white papers on adapting to the new water scarce paradigm, all while studiously avoiding any mention of the full glass of water sitting right there on the patient's nightstand. Worse yet, this isn't something Russia initiated. Our dehydrated patient himself chose to stop drinking with a little help from an anonymous friend who destroyed a pipeline. In a long history of nations rising and falling, I think you'll be hard pressed to find another instance of a leading industrial power actively choosing to sabotage its own prosperity like this, with full awareness of the consequences. I think this is said well and articulated far better than I could have. And so that's it for this week. Buy on the election of Donald Trump, sell on the inauguration. That's the title of this week's video. That's my view. Um, but we'll see. Again, bubbles can always surprise to the upside and can continue longer than anybody thinks is reasonable. But I think you have opportunities here in energy, which I've been talking about, that haven't been seen for, 4 or 5 years since the pandemic, when we had, we made a tremendous amount of money when we were buying a sector that was tremendously out of favor. And we're in some cases at those lows again, at those same valuations. Okay, that's it for this week. Again, Merry Christmas. Have a Happy New Year. God bless. And we'll talk to you next week.